Good afternoon. Todd Engelhardt, Regional Director of Investments, Cumberland Advisors, standing in for Matt McAleer. It is Friday, June the 2nd, shortly before the close. I am joined today by Shaun Burgess. In fact, Shaun got the memo. We're both blue.
Great minds think alike.
Shaun is a fixed income portfolio manager and analyst here at Cumberland Advisors. We had a pretty good 4-day trading week. The usual names such as Apple, Google, Meta, Microsoft that have been carrying the weight of the S&P 500 for much of this year. We actually saw some breadth enter the market over the last couple of trading days. The S&P, the Dow, and the NASDAQ at present hovering around a 2% gain on the week. However, one thing to be very mindful of is the year-to-date influence on the S&P 500 of those larger companies, the heavyweights, particularly the large cap growth names, some of which I mentioned. The market capitalization weighted S&P 500 is beating the equal weighted counterpart by approximately 10 full percentage points through 2023. That's one of the biggest margins of outperformance year to date on record. That's a spread that historically has been extreme in our work and must be considered when positioning capital. Always important to recognize statistical extremes. But as I said, the past couple of trading days has shown some breadth in the market, multiple sectors participating. It's good to see. It's oxygen for the market. Shaun, what are you seeing in fixed income?
Yeah, it was a good week for fixed income, more so for Munis than Treasuries this week. Treasuries were lower in yield, as were Munis. Gave a little bit of that back today. We had some very strong labor numbers come out. Non-farm payrolls beat by quite a lot, and private payrolls beat. So, both of those numbers drove yields higher, but in general, you're still lower on the week by about anywhere from 6 to 9 basis points. Some of the overhang from the debt ceiling negotiations are kind of fading. We're looking at a deal getting signed possibly Saturday. So the market's looking beyond that to what numbers are we seeing? The labor numbers made an impact. We're going to have CPI numbers on the 13th, and market participants are really looking to see and try to determine what the Fed's going to do here, because those labor numbers really have to give them some pause in whether they're going to hike on the 14th, possibly beyond that, or whether they're going to pause and you may see a bigger hike thereafter. So all that's up in the air, but it definitely had an impact on Treasuries as we end the week here. Munis, John talked about it last week, the June 1st rollover period. Munis were really strong off of that. Saw great demand on new issues where we went in seeing oversubscriptions 10, 11, 12 times, numbers like that. So it was nice to see Munis rebound, and we expect that to continue as you get to the June 1st, or through the June 1st and into that July 1st period. Typically, those are some strong periods in the Muni space. So it was very nice to see Munis have a good week.
Good. We did have some trading activity this week. In our U.S. ETF strategy, we put a small amount of cash to work in travel and leisure. And in tactical trend, we use recent strength in tech to sell down RYT, which is the equal-weighted tech ETF, and reallocate it to a new name, Vertex Pharmaceuticals, ticker VRTX, off of its recent weakness. For those of you who are in market volatility and leverage market volatility, our main lot that was purchased in mid-March of 23, we reached our target, and those strategies have moved to cash. And in Sector Alpha, we are now rotating to the defensive sectors, healthcare, consumer staples, and utilities. It will be interesting to watch the 4,200 level on the S&P 500, see if it provides some support on breakout. Matt will be back with us again next weekend.